All right. It's a great day in South Florida. My name is Chris Igo. Welcome to Living in South Florida. If you're new to the channel, welcome aboard. And if you're a returning viewer, then thank you for continuing to participate in my journey. This video is all about the liquidity crisis, which will destroy the housing market and the potential for half-price homes. So if learning more about that is your thing, then please keep watching. Boom! Boom, we're live. All right, so today we're going to get right into it. And before we do, I need to share that prior to becoming a real estate professional, in my past life, I was a stockbroker for 18 years. And during the course of my 18-year career as a stockbroker, I experienced market crashes. I experienced global market crashes. I experienced the impact of corporate failure, government failure, currency failure and devaluation, too big to fail, and every possible economic disaster that could happen globally because I was trading equities on a day-to-day basis for my clients. It was a 24-hour-a-day job. I was constantly glued to CNBC. I had to know what was going on in every market everywhere in order to be able to give my clients perspective and the best information so that they could make the best decisions for themselves, for their family, and for their financial bottom line. But the main difference between trading equities and the real estate market is that equities price in change instantly, and the real estate market doesn't. And so while there are all kinds of things that are happening right now in the economy and in the world, they really haven't impacted the real estate market very much, at least not till this point. And when I say that, I got to take a step back. It's absolutely changed the dynamics of the real estate market here in Florida, of the housing market here in Florida, and everywhere else in the country. But up to this point, at least in my market, we haven't seen anything that looks like a price crash. What we've seen is a return to more normalized growth. And I don't expect to see that change until the pain of this recession is felt, until there is a liquidity crisis. But make no mistake, there will be for some people and some markets, and that will happen sooner rather than later, depending on where they're at. Now, just to give you some context, the financial crisis of 2007, 2008, was really driven by the subprime mortgage crisis, and it caused a severe contraction of liquidity in global financial markets in the US, and as a result, the housing market. We don't have a subprime mortgage crisis today, but what everybody seems to be oblivious to is that it's not going to be the same thing this time that took us out last time. It's going to be something different. And I want to talk about what some of those things are so that I can prepare you and inform you so that you can make the best decisions for yourself, for your family, and for your financial bottom line. Back in the crisis, back in too big to fail, back when everything was roaring and the housing market was taking off, we were on a bull run everywhere and everybody felt wealthy. Everyone felt really good about their financial position. And then on September 25th, Washington Mutual, which at the time, WAMU, which was the 6th largest financial institution in the United States, it was shut down. And it was shut down because deposit holders withdrew almost $17 billion of money, and the bank no longer had any reserves. As everybody knows, that's not a good thing, right? If the consumer cannot trust our financial institutions, if they don't believe their money is safe, there will be a run on the banks. And if there's a run on the banks, then we've got a liquidity crisis of epic proportions, which absolutely is going to impact every sector of every market, period. Now, I am blessed because I receive so many phone calls from people around the country and around the world, people just like you who are watching my content. They reach out, they've got questions. They hire me to help them go out there, find their dream home, find their dream lifestyle, get them the best deal possible, or give them the best advice possible. And I am always committed to doing that. So full disclosure, I am a real estate professional and I do want to support you in your home buying journey. If the economic conditions and the market conditions and your financial position is not intact and you don't have total clarity around it, then I am most likely going to advise you not to buy a home. So part of my process, and part of any real estate professional's process, should be that they really need to understand, and they really need to lean in to help you understand what the financial implications and risks are depending on what your situation is. And right now in this market, in South Palm Beach County, there are plenty of buyers that are very affluent that are out there buying homes, and they are thrilled to do so. So not everything I'm about to share is necessarily going to impact everybody the same way, but it is critical to understand what is happening in real time so that you can go out there and position yourself the right way. So here are the things that I see that are happening right now, which tell me that we are primed and ready for a liquidity crisis of epic proportions. And I'm going to start with the auto market. I'm going to start with auto loans. If we look back in history, if we look back in 2007, 2008, and we look at the subprime loans that existed in the housing market and the mortgage market, and anybody out there with a pulse that was willing to state that they made a certain income could go out there and buy a home, and they could buy way more than they could afford, and they could put almost no money down or no money down. The mortgage fraud was completely out of control, and everybody turned a blind eye to it, and nobody seemed to care. Everybody was making money, and everybody was making hay when the sun is shining, which is why I'm glad it's raining out right now, because we're going into a storm, my friends, and you need to be prepared for it. I hope I don't forget to talk about the risk that is inherent right now in the homeowner insurance space in Florida. So mental note to self, don't forget to talk about that, because that is also going to create a liquidity crisis if we get hit by a series of hurricanes, which, by the way, we haven't been hit by a series of hurricanes in almost 10, 15 years. And right now there are storms that are developing in the Caribbean, which I think we're outside of the forecast, but that forecast can change on a dime. So we're going to get into that, but not right now. I want to start in the auto loan space. I want to talk about the car market, because that bubble is burst, and the pain of that is going to directly impact anybody who went out there and bought some kind of crazy luxury car. Right now, we are at all-time record highs within the default and the repo auto loan industry. Lenders are out there repoing, and the next step is they take them to auction to sell. But these lenders are not actually selling at these auctions, because if they do, if they realize those losses, their balance sheet takes a massive hit, and very quickly, we've got banks, we've got lenders at risk of systemic failure. We don't have that dynamic in the mortgage market, but we absolutely have it within the auto industry. And I don't think it takes a genius to figure out that if you can't pay your car loan, chances are you're probably going to have a hard time paying for your mortgage on your home. But truthfully, I don't know what anyone's financial position is, or if that causes enough pain. But I do know if a bank fails, if a lender fails, if there is one bank that goes insolvent, it will destroy the psychology of the market. It will destroy trust in institutions and banks, and we will have a run on banks. And it's a domino effect. So flashback to when I was a stockbroker, and I'm watching these things develop in real time, and I'm watching people lose their minds, and clients. The fear and uncertainty that existed in that moment was terrifying. It was the scariest thing I had ever experienced. And yet my job was to continue to find the best information so I could position my clients the right way. Now, I am a capitalist. I believe in America, and I believe we will figure it out. And I believed that back then too. But the government has done so many things since then to bail out banks, to bail out corporations, to stimulate the economy. They no longer have any powder dry in order to do any of those things today. And if they do, which honestly I can't even imagine, but if they were to do that, then we've got massive issues. The ensuing crisis that will happen is beyond my scope of understanding, but I do know it will be an absolute disaster. Now, the next risk that I see out there that I've been talking a lot about and everyone is experiencing is inflation. Inflation is running rampant. And yes, we had a little bump in July, and it looked like we saw a little bit of improvement. But make no mistake, inflation is increasing. And while yes, gas prices have gone down a little bit, they are still extremely high. But the inflation that exists on consumer goods that we actually need to live have increased by 30%. And that's continuing to increase. I'm talking about basic household supplies. And while not everybody feels the pinch of that, a lot of people feel the pinch on that. And that pain is eventually going to squeeze everybody in some form, in some fashion. And when it comes right down to it, if someone has to make the decision as to whether they will feed their family or pay their mortgage payment, I suspect they're going to make the choice to feed their family first, which of course, at some point is going to create distressed sales. And if there is an oversupply of distressed sales on the market, I can assure you those homes are going to sell at a discount, period. And you might find yourself with half price home. And again, it's not going to be everywhere, but it's going to be in a lot of places. And if you go back in history and you look at what the market looked like back in 2007 and 2008, the biggest bubbles that existed were in Arizona and they were in Florida. And those markets were the big bubbles that crashed. Well, today's market nationally is different than that. The bubbles are not concentrated in those two places. Those bubbles of appreciation are much more evenly distributed. And the reasons that people are moving to Florida today are very different than they were back in 2007, 2008. So I am a firm believer that my market locally is more insulated relative to other places, but make no mistake, everyone is going to feel this pain. Now let's go a little bit more macro and let's look at some of the biggest corporations that exist right now today. Let's look at the S&P 500, which are the 500 largest companies in the United States. 20% of the top 500 companies cannot pay their debt. They cannot service the debt that they've incurred, which means they are zombie companies. And if they don't get infused with capital, or they can't raise new rounds of capital, they can't pay payroll. And if a company can't make payroll, that company is out of business. And I watched it happen to Bear Stearns, and I watched it happen to numerous different financial institutions that if the government did not come in and inject them with capital, they would have been gone. Poof, obsolete. But today's government, today's treasury, does not have the liquidity. Yes, they could print money, which would then devalue our currency in a way that I don't even want to pretend to think about. But I think it's pretty fair to assume that 20% of the companies that don't have enough money to pay their own debt are likely going to have to lay off massive amounts of people to stay in business. And if people who are out there who are experiencing pain no longer have a job, they will be forced to sell their home. And again, this won't apply to everyone, but if there's a mass exodus of people who want to get out of their home and are mailing their keys back to their lender, I got news for you. Half price homes are back on the table. And now I'm going to end this with the biggest threat that I see out there, which is the upcoming hurricane season. Now, as I mentioned, it's been a while since South Florida has been hit by a hurricane, or really the state of Florida has been impacted by a big storm. The last time we got hit with a big storm, we didn't get one storm, we got 3 in a row, and it created billions of dollars of insurance payouts. And the insurance companies took a massive hit, but they had the capital to be able to do so. Today's market is not like that. The insurer of last resort, which is Citizens Home Property Insurance, which is funded by the state, does not have the capital reserves to pay out in the event of a massive storm. They just don't have the money on their balance sheet. And it's a massive risk. And because of that, we've seen them jack up premiums. We've seen them deny many people coverage. But if we get hit with a series of storms or a massive storm, they don't have the cash to cover the claims, and that will create assessments. And what does that mean to you? Well, it means if you're a policyholder of Citizens Insurance, well, it means you're definitely going to be assessed. And they have some limits as to what that looks like. But I got news for you. If a big storm hits, they're going to change those limits and everyone's going to feel the pain. But I also believe it's factually true that if the policyholders can't cover it in totality, the state will step in and every homeowner in Florida will get an assessment. Now, if economic conditions are good and people feel whole and people have trust in the system and people have jobs and they're not in a personal economic crisis, well, then I guess it'll be absorbed. But if that's not the case, which I suspect it won't be, then people will be forced to reevaluate their position. I suspect there will be more distressed sales. Now, I don't share this to scare you. I share this to empower you so that you can go out there and make the best decisions for yourself, for your family, and for your financial bottom line. In spite of everything I just said, I personally just bought a home. So as the case study and test subject of all of this bad news, it still was right for me to go out there and purchase a home. And I'm fully aware of the risks. If the market goes to zero tomorrow, I'm still thrilled that I got that home. But my eyes are wide open and I know what all the risks are. And again, specific to each person, because every person is different and everyone's needs are different. But the big risk that I see in terms of ability to purchase a home in the future are the interest rates on mortgages as we move forward. Because I believe interest rates are going to increase radically over the next 2 to 3 years. And I don't really see any relief from that anytime soon. But make no mistake, irrespective of everything I just said, the market is always good for someone. And real estate will always trade. And if you buy a home and your timeline is long enough, I don't really believe there's any risk, because I know those homes will appreciate in value. So what does that mean right now in today's market? It means today, if you're a buyer, you must be informed, you must be prepared, you must know your numbers. And the great news is there are way more choices in today's markets. So you can go out there and negotiate the best deal possible right now. And chances are, if all the things I said do come true, at some point in the future, you're going to be able to get a better deal. And everyone's different. Some people want to be here right now and they want to max out South Florida living to the fullest. Others are a little bit more patient and want to wait. There's no right or wrong. It's what's right for you. Now, I've talked about buyers that are thinking about buying. It's also critical to talk about sellers, because if you listen to anything, the market in the future will be very different than it is right now. And right now, if you're thinking about selling and you're in Southeast Palm Beach County or Broward County, we have had a massive change in inventory, in supply, and in demand. And in many places, it is still a seller's market, but those dynamics are changing fast. So if you're thinking about selling, that time is now. So if you're even thinking about moving to or living in South Florida, you've got to give me a call, text, DM, send a carrier pigeon, a smoke signal, by any means necessary, because we've got your back when it comes to moving to or living in South Florida. Now, if you found this content valuable, please subscribe, share it with a friend, give it a thumbs up, and check out my next video here, because I think you're going to love it a lot. And until next time, peace.